Hello everyone, PS from PS Invest plays here today. Like many travel stocks, Airbnb had a rocky road in 2020. Nonetheless, the company decided to go public late last year and its stock price jumped 200% from its IPO price within the first 3 months. But recently, in October, the stock has shed 25% from its all-time high. Is this trend going to continue? Or can we expect higher stock price in 2021 and beyond? In this video, we will understand its business, its financials, its future growth outlook, and review its charts using Elliott Wave to see how we can make money. So stick around. I think you'll like what I have in store for you today. Airbnb, ticker ABNB. Airbnb is an American company that operates an online marketplace for lodging, primarily homestays for vacation rentals and tourism activities. Based in San Francisco, California, the platform is accessible via website and mobile app. Airbnb is becoming synonymous with short-term rentals and short-term travel. The company's online platform and app encourage hosts to list places for rent, whether traditional rooms and homes or even tree houses and detached garages. The broad assortment of types of structures to book, coupled with its wide availability across regions and countries, makes it a popular online destination for folks looking to find lodging while traveling. An essential aspect of Airbnb's business is that the company does not own or operate any rental properties. Similar to eBay, it creates the platform and manages the interactions between hosts and guests. The asset-light business model has the potential for excellent profit margins because there is no need to pay for building or maintaining expensive structures like hotels or resorts. Moreover, Airbnb can hire customer service staff in low-cost parts of the world to support guests staying at properties in high-cost areas like Los Angeles. 2020 closures caused Airbnb's revenue to fall by 29% in fiscal 2020. Before 2020, Airbnb increased revenue by 42% and 31% in 2018 and 2019, respectively. Overall, revenue was highest in 2019, where it totaled $4.8 billion in revenue. In 2021, Airbnb is seeing phenomenal growth compared to 2020. But some investors are concerned the success it is having this year will not last. While near-term results are uncertain, the company's long-term growth potential points to dominance in the travel industry thanks to 3 competitive advantages. Number 1, unmatched uniqueness. With Airbnb, unique stays are commonplace. You could even spend the night in a dome in Maine if you would like. The company is able to offer these one-of-a-kind experiences because of its focus on host satisfaction. Airbnb says hosts will be at the center of Airbnb because they are the foundation of the company's platform. To attract hosts, the company tries to make its services simple and easy to use. Airbnb saw growth in the number of active listings on its platform during the last quarter, partially driven by an 8% sequential increase in active listings in non-urban destinations in Europe and North America. For clear evidence of the company's ongoing recovery, nights and experiences booked increased 197% year over year to $83.1 million. Airbnb succeeds in another travel category, long-term stays. About 1 in 5 nights booked during the second quarter came from long-term stays, which the company defines as 28 days or more. And 50% of nights booked were for stays lasting 7 days or longer. The company expects this trend to continue. 81% of Airbnb users who booked long-term stays in the second quarter said they intend to do so again in the coming year. Strong financial resilience. Second quarter revenue increased 10% to $1.33 billion compared to the same quarter in 2019. Booking Holdings, another leader in the online travel space, hasn't been nearly as successful bouncing back. Its second quarter revenue was down 44% on a 2-year basis. Airbnb has also been able to increase its average booking value per night, which rose 38% from the second quarter of 2019 to $161. Its unearned fees, revenues from consumers who have already booked a trip and paid but haven't checked in yet, also grew, up 41% to $1.48 billion over the same period. Airbnb produced stellar free cash flow (FCF) once again in Q2 2021 with 58% FCF margins. Recently, Airbnb reported that sales were up 320% year over year, but over 2 years, revenue was up 10% from Q2 in 2019. Moreover, the company's EBITDA, earnings before interest, taxes, depreciation, and amortization, turned positive and rose to $217 million during Q2. This was after posting EBITDA losses in the past 2 quarters. Airbnb reported that this upturn in its revenue and EBITDA was due to the worldwide travel rebound during Q2. Airbnb also reported that its free cash flow (FCF) hit an amazingly high level of $784 million. This is the highest amount of FCF the company has ever made, including compared to Q1 when it made $487 million. Given that Q2 revenue was $1.335 billion, this means that the Q2 FCF margin was very high at 58.7%. This exceeded the Q1 FCF margin of 54.9%. Looking at the financials for Airbnb, revenue, gross profit, EBITDA, net income, EPS, earnings per share are improving considerably year over year and quarter over quarter. Looking at the assets and cash in hand for Airbnb, they have increased by 50% and 20% year over year respectively. And when you compare them against the liabilities, it has also increased, but not by a very big margin. I believe Airbnb has substantial competitive advantages in a large, fast-growing and global market. Airbnb acts as a system of trust in the private rental accommodations market, removing a considerable amount of friction so hosts can trust unknown guests and guests can trust unknown hosts or properties. I believe Airbnb has an attractive growth runway given its unique inventory, powerful platform, and system enhancements that further reduce user friction. With reopenings, I see Airbnb as well positioned to benefit from secular growth in travel, the increasingly mainstream nature of private rentals, and as hybrid work travel can lead to more frequent and longer stays. Unlike traditional online travel agencies like Booking.com and Expedia, Airbnb's user traffic comes almost entirely directly, which speaks to the brand's strength. This also means that Airbnb does not need to pay Google or other search engine nearly as much money for generating booking leads, which is a favorable structural business model advantage in my view. I expect the company's bookings and revenue to compound at a high teens rate or better over the next 5 years and margins to expand by thousands of basis points as it scales its fixed cost base, leading to 40% plus earnings per share growth over that period. I understand that the main concern for investors is the valuation. Airbnb is trading at 23.2 times sales compared to Booking.com, which trades at just 14.1 times sales. The market has much higher expectations for Airbnb. So while the company expects some ups and downs during the next few quarters, the stock is also likely to experience volatility going forward. But Airbnb has set itself apart in the travel industry with the most popular platform for home sharing experiences, and this leading position can help sustain its growth long term. I think it is a good time to start accumulating shares of this growth stock. This is also indicative in the charts where I see the stock price to increase considerably in the next 4 to 5 years. Now let's look at the charts for Airbnb. If you like this video, please don't forget to subscribe, hit the like button and hit the notification bell icon so you're notified when I upload a new video. Looking at the chart for Airbnb, the bull wave that started in late 2020 is still not over. It has completed its first wave, and wave 2, which is a corrective wave, is in progress. I see strong resistance around $160 and strong support at $145. This to me is an excellent buy range. In fact, I would recommend to nibble any pullbacks and accumulate corrections. After this corrective wave is completed, I expect wave 3, which is an impulsive wave, to resume. Wave 3 is typically 200% of waves 1 and 2, giving us a short-term price target of $331.10. After this wave is completed, I expect wave 4 to resume, which is typically a retracement or a corrective wave, and it is typically 23.6% retracement of wave 3, giving us a short-term corrective price target of $284.43. After this corrective wave is over, I expect wave 5 to resume, which is typically equal to wave 1, giving us a final price target of $525.48, which translates into a 211% profit in the next 4 to 5 years. Now, let's summarize. As I said earlier, wave 2 is in progress. I see strong resistance around $160 and support at $145. This to me is an excellent buy range. In fact, nibble any pullbacks and accumulate corrections. I recommend to hold it for the next 4 to 5 years, as I see a price target of $525.48, which translates into a 211% profit in the next 4 to 5 years. What do you think of this analysis? Please leave me a comment and let me know. As always, please don't forget to subscribe, hit the like button and hit the notification bell icon so you're notified when I upload a new video. Until then, bye-bye.